Hey traders, and this recap video I'm going to walk through why in choppy markets it's pretty smart to be a day trader. And right now we're looking at this copper market on the daily, and this is a choppy market. How do I know it's chop? Well, there's some really easy visual telltales that we use, and that is the blue, the red, the green grab candles in quick succession. You look at the angle of the 34 EMA wave pretty much moving, sort of meandering sideways. We're stuck in a range, and that's chop. Trending markets are going to have a nice consistent series of green grab candles. We're going to see the smooth upward angle of the 34 EMA wave. We're oftentimes going to see the propulsion dots. So chop looks very different than trends, and we're in chop. So within the context of chop, the challenge is that on any given day, we could move up, down. We could try to make it to the middle of the range of the chop. I mean, there's really no dominant psychology in control. Now, there is an exception to that, and that is I will respect the trend that was, which is most certainly up on the daily. Even though it's chopped now, it was up, and it still is up and intact on the weekly. So, the undercurrent is bullishness, but you never know where the market could roll over or exhaust, and that's why when the market isn't chop, unless you're willing to wait for those weekly pullbacks, which is fine, you probably want to be pretty nimble. And nimble then means you're focused on, to me, 60-minute, 30-minute, 15 or 5, 15 and 5 being the most nimble of them. So we know we've got an uptrend, and being a day trader means what? I'm not being a contrarian. I'm just looking for the intraday trend to either continue or roll over. We've seen a really nice looking trend on the 60-minute time frame. And there's a pretty good chance that we could pull back to this level here. But in order to get that, and this is the 34 EMA on the high, in order to get that, I would have to see some intraday short-term weakness. And we might be seeing exactly that right now. So this is what I call one thing leads to another. One thing leads to another, where a short-term rollover may get me to the support, whatever that may be, of say a longer-term 30 or 60-minute time frame. So I'm looking for the market to head down until it finds support somewhere else. And it's that intraday weakness that we're seeing right here that would basically carry me down to that level. So this is a pretty good textbook image. Even though we're in the Asian session right now, it's a pretty good textbook of what I want a rollover to look like. I want there to be a nice uptrend. I want that uptrend to break the 34 EMA on the low and or some sort of Darvis level in that similar area. Then I want to see the CCI, the 20-period Commodity Channel Index. Let me pull it up here. 20-period CCI go negative, which it has, breaking the negative 100 level. And then I'll look for follow-through. Now, follow-through to where? I think it could be pretty likely we'll catch support either in this level right there, which is that 314 level, or we could probably look to say 1280. So if we sell off, my first instinct is when we get to about 3.1405, I want to take a little something off the table and pay myself. And then we get down to 3.1285. I want to do that again. So those could be two really good downside targets for what is going to be a 5-minute intraday trend reversal, or it rolls over, and then it could lead ultimately to an intraday trend follow. The 60 really has my attention even more than the 30. I'd rather go with the 60 than the 30, quite frankly. So again, to get that correction, I'm going to need the intraday weakness, and it's that intraday weakness that it's triggering now. And this is where sometimes within chop, it's really effective to understand how to be a day trader. And this is how it leads you to levels where you can engage what I think is a dominant, even within the context of the chop and the daily, what is still, I think, a relevant, maybe not dominant, but a relevant psychology running the market.